Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to take a look at what we teach in our training webinars, and that's to only trade when you get a good clear pattern. It just makes sense to me, and there's no point taking trades where the pattern's unclear because you're just throwing good money away. And we know from experience and the cyclical nature of trading that the market goes in cycles. There's periods when it's unclear, and there's periods when it's a lot clearer and you get some great trade setups. So I just want to go through yesterday on the USE minis, because this is actually a perfect example of this, and really highlights why you should only trade when you get a good clear pattern. It just makes a lot more sense to me. So let's have a look at the three USE minis. Let's look at the ES, the NQ, the YM. I won't look at the Russell Index in too much detail today. So let's have a look at the ES to start with. Remember our color-coded STF indicator down here. We tend to we don't tend to use this. If you're more experienced, we tend to go to the higher time frame charts. So let's have a look at this to start with. Well, initially here on this 3-minute chart of the ES, we seem to have got a very nice trade setup there. That TS3 sell would have been the high of the day, would have actually been a very nice trade setup. It would have actually returned a 3-hour profit. This TS1 here earlier did go to the 100% initial risk level, but may well have actually been stopped out for a -1-hour loss. But to me, this wasn't a good clear day, and I'll show you why. If we go to the 15-minute chart, normally I like to place the DPs on the 15-minute or higher time frame. For 3-minute charts, that would be the 15-minute chart. If you're trading, say, 15-minute Forex, it would be the hourly. If you're trading daily, it would be the weekly. So here there aren't really any DP support and resistance levels. For these, we go back to prior pivot highs and lows, and we place the DPs on, and you can see, well, there was the last resistance. We're through it. Not quite sure what's going on. The next one is probably all the way up here, which is right up the top there. We hadn't reached it. You know, yesterday is what I call in no man's land, so it was quite difficult to gauge what was going on. So if we come back on this, it would be quite a hard day to gauge the large degree trend, so it would have been quite tricky. For you guys who are purists on on Elliott wave theory, the patterns, it's amazing how they work out if you are looking at Elliott wave theory, because this rally into this TS3 would have been a perfect ABC with the high right at the minimum wave CWPT. The market then declined down here into this particular low, which would have been a VSA setup. In other words, this bar here was our VSA on our volume. It then snapped back and reversed fairly sharply, but it did it, if I put the Elliott waves on here, it did it right at the minimum wave 5 WPT. So you can see we had an ABC correction up into the high. After that, we had a 5-wave decline down with the low of the day right at the minimum wave 5 WPT. But again, even though the pattern here looks absolutely ideal, to me, the actual trading at the time would have been quite tricky because of the picture of the large degree trend. And I always say that rather than try and struggle with trying to identify trades on a single market, it's best to have a look at all the USE minis, because very often, as we'll show in a minute, even though the large degree trend was unclear on the ES, it was better on some of the others. So let's go to the NQ. NQ was a slightly different picture. Even though the market was declining, we actually had a couple of buy setups. So how did that fall into the large degree trend? Well, here we go out to the 15-minute chart, and what we would have done is gone out to the prior pivots or previous pivots and placed the DPs on. So here's the last swing high, which would have been the high of the day on the 13th. You right mouse click, place the DP on, and remember, these DPs are on the chart in advance. They're leading indicators. They're there before the market even gets there. And as you can see, the market went up and actually made a high right at the end of the previous day, which was the 17th. But the point being is this was right at our DP resistance area. Therefore, yesterday the large degree trend would be down. Very nice to see that the low of the day on the 14th was caught right at this DP here off this previous low. So the market went from DP to DP very nicely. But can you see how the large degree trend would have been down? So if the large degree trend is down, you'd only be looking for short setups. Therefore, these buy setups you had here would have been against the large degree trend and therefore would have been avoided. So on the NQ, nothing to do yesterday. But now look at the YM. Again, we had some nice trade setups. We had some buys and sells. But let's now put the higher time frame DPs on and see how this looked with the large degree trend. Remember what we do, we just go out to previous pivots, and there's a swing high, which was the high of the day, basically the previous day on the 17th. So you'd have gone to that pivot, right mouse click, place the DP on, that would have given you a resistance area. Remember, that resistance area would have been on the chart before the market even got there. That's the important thing. It's a leading indicator. After that high was made, the trend came down. We would have then been coming down into the DP off this low here, which you can see we haven't reached yet. So let's now go down to the 3-minute chart, which is what we're trading off, and just see what a difference a clearer, larger degree trend picture makes. Remember, on the ES, we were unsure of the trend, even though the pattern was quite nice. On the NQ, the large degree trend was down, but there was only buy setups. But now look on the YM. Here's the 15-minute resistance. Remember, that would have been on the chart in advance. The market went up and made a DP sell. Remember, we're not looking at the color of our VSA setup, sorry, our STF down here. We're looking at the hard time frame support and resistances. So here we had a DP sell right at 15-minute resistance. This would have been a good one to take. Let's place the analysis on. Market came down to its first target here. Would have been a nice 3.1 hour profit. Remember, we use correct position sizing to keep our initial risk small and under control, and that allows us to have profits that are larger than our losses. So do you see that? A very nice, clear, clean trade setup down there for a nice 3.1 hour. There was then another trade setup a bit later here, a TS2 sell. Again, this was in the large degree trend because we had a nice clear high here on the 15-minute DP, down into the lower DP. We then placed the analysis on. That would have been a nice trade, again into the first target for 2.7R. So you'd have had 3.1. I think that was 3.1 to start with, wasn't it? Just do that again. Yeah, it's 3.1 plus 2.7. Let's just do that. 3.1 plus 2.7 equals 5.8R, or almost 6R profit. Let's have a look at the DP buy. Well, that would have been against the large degree trend, because the trend is still down because we haven't reached that 15-minute DP. The sell setups right towards the end of the day here you'd have been avoiding because basically they were there at the end of the day. So you wouldn't really want to take a setup here with only a few more minutes to run. So you had two nice trades, two profitable trades, very, very nice indeed. I particularly like this DP sell here as the high of the day, because if we look at the volume, this was actually a VSA setup as well. So in other words, this bar here that went up to new highs was our VSA bar on the volume. The very next bar failed to follow through and reverted our 15-minute DP resistance. Therefore, we knew that professionals were stepping in here and actually selling the market, and that was then going to move the market lower, which is exactly what it did. So that gave you extra confidence in this DP sell because it was also a VSA sell as well. So the professionals were coming in and selling the market at this level. But do you see what I mean is that why try and struggle with a market that you were unclear of the large degree trend? Let's say even though the patterns we had here were very nice indeed, but the large degree trend was unclear. Why try and trade against the large degree trend here when the buy setups were against the large degree downtrend? Can you see how much easier it was yesterday to take the trades that were clean, clear and obvious because we had a clear, clean 15-minute or higher time frame picture, where here on the YM it was by far the better trades to take, and the result would have been two very nice profitable trades for plus 5.8R. So hopefully that's helped to show my philosophy on trading is it's best to trade when the picture's clear. It seems obvious, but hopefully this has been a good example of how to do that. And just to show you how that would have manifested itself using the MTPredictor software yesterday. Interesting that people say you can't pick the highs and lows of the day. Well, here's yet another example of where MTPredictor caught the very high of the day on the USE minis with that very nice DP sell. Again, it was right at that 15-minute resistance area that would have been on the chart in advance. So I think a good example of how to trade sensibly and when you get a clear, clean picture, and have a look at how that would have worked using the MTPredictor software program yesterday, which would have actually had some very nice trades on the YM yesterday. Again, my favorite was that DP sell at the high of the day. Lovely trade setup that was.